David Zervos. He's chief market strategist at Jefferies, a CNBC contributor as well. He's out at the DNC in Chicago. Dave, I don't know if there's anything there that kind of changes your view on the world.
I think there's a lot out here, Kelly. I think it's a big shift for us to start thinking about what the Harris agenda is. We've seen little bits of it come out on the economic side over the last few weeks, and a few more significant ones in the last week or so, and we're all trying to digest that. I think trying to understand what the idea of price gouging and stopping price gouging is. We're trying to understand her tax policies, how she's thinking about monetary policy, and most importantly, regulation, which we haven't got a lot of clues on. So I'm eager to get as much information as I can to help our clients navigate the next 80, 90 days of figuring out, or I guess 80 days now, of what the selection risk really means for our portfolios. It's a tricky time. And that may be, that may be it, Kelly, that this is more of the volatility that we're seeing is just people getting a little nervous around what's going to happen November 5th.
Sure. I mean, I always think of you as able to kind of distill all of that churn into a very simple trading strategy, one that often can sustain itself for years at a time. But to leave that as a bit of a tease, in the meantime, I wanted to ask you about the rather prosaic issue of corporate tax rates. I mean, if she goes to 28%, as is rumored, if Gensler is Treasury Secretary, is there anything in that would dramatically affect stock performance one way or the other?
I certainly think so. I think Gensler as Treasury Secretary is a big deal. I think the regulation side, as we've argued in our notes to our clients, is the biggest difference between a Trump win and a Harris win, deregulation versus either re-regulation, more regulation, or even status quo. So to me, that's really where the market's going to key off of. And if I go back to 2017, 18, and 19, and I think about what Trump policies really drove the economic landscape, I just come back to regulation as being a big driver of almost everything that happened. I don't think tariffs really played that big of a role. I don't think fiscal was as important as people thought it was going to be. We didn't see big rises in the debt to GDP ratio. We didn't see all that inflation from tariffs that everybody thought was going to happen. In fact, inflation was stable to lower those years. So I really think that the market keyed off of deregulation, and the market will once again do that on a Trump win. And what we've got to learn from the Harris administration is, and the economic advisors that she has, is are we actually maybe preparing for even more regulation under a Harris win than what we had under Biden? I did think it was interesting that we didn't hear the word Bidenomics much in the first. I don't think I heard it once, actually, yesterday at the DNC. So there is a distancing, and we've really got to figure out what, you got to help me come up with the right word for what Harris-conomics is, because that doesn't sound very good. But we need to understand what that is, and I'm beginning to think it's really not Bidenomics.
Well, but David, we're also in a very different overall economic environment than in the 20-teens, aren't we? We're not in a low-rate environment in the same way. During the Trump administration, there was a lot of spending, and not bringing in as much revenue perhaps meant something different than it would now. I mean, should investors really be thinking of the next 4 years in terms of how we looked at these things in the last decade, or are the demands and challenges just very different?
John, I think that's a really important point, particularly on the rate side. We didn't have the interest expense on the debt. I mean, that's a significant part of the expenditure now, and that wasn't an expenditure under the Trump administration. Although rates were rising, they were peaking at 2.5, not 5 1/4, and they were back down to 1 3/4 by 2019. So I think you're right to say there were lots of differences on the budgetary side that we need to think about. But rates are coming down, as we all know, and they're likely to continue to come down in the next administration, whichever one that is. But I really step back and I look at both a Harris presidency and a Trump presidency, and I think both of these administrations will be reasonably profligate when it comes to fiscal policy. I don't think they're big cutters of spending in any way, shape, or form. Maybe one's a little bit more of a tax increase than another, but fiscal profligacy is probably here to stay, and I think trade policies will largely be the same under both. I don't think it's very genuine to say that the Biden administration or a Harris administration would be that different on trade than what Trump is proposing.
I think
he just has a different tact of achieving it.